Hi everyone, and welcome back to StatsTerminal channel. In today's videos, we're going to recap 4 trades that I took on June 8th. 3 of them were winners and 1 was loser. More importantly, I want to walk you through my thought process before each trade, the statistics that I was monitoring in StatsTerminal, what was I seeing in the order flow, and the lesson I took away from it. My goal with this recap is not to show you perfect trades, it's to demonstrate how I use statistics, market structure, and order flow to build my trading plan. Before the market opened, I spent some time reviewing the data in StatsTerminal. The first thing I looked was the overnight session. I found overnight session to be very important. I wanted to understand where price was relative to the overnight high and overnight low whenever we're opening inside or outside the overnight range, and if there were important levels from the previous trading day that could become target later on in the session. Next, I reviewed the RTH Open statistics, time of the day statistics, and historical behavior around the opening range and the initial balance. One thing I always remind myself is that statistics don't predict the future. They simply help identify scenarios that may historically show an edge. For the first trade, my primary idea was to short below RTH Open and to target the low volume node, as you can see on the profile. The reason for this setup is time of the day statistics in StatsTerminal. Historically, during this particular time window, the market has shown a tendency to move lower when trading below RTH Open. Of course, this doesn't guarantee anything, but it provides some sort of a statistical framework for me, and I like that kind of setup. As traded below the RTH Open, I wasn't interested immediately in hitting the sell button. I wanted to confirm with order flow first. Specifically, I was looking for absorption. And basically that was my signal to enter the trade. My first target was the low volume node for the first 2 contracts, and my final target was the VWAP. As you can see in the heat map 2, there is significant liquidity, resting liquidity below. So what I learned from the past is those liquidity usually act as a magnet. The trade works great all the way to the low volume node target, but I never got the VWAP target. But overall, it was a good trade. I trailed my stop accordingly, and it was good. For the second trade, I used the RTH Open setup again, but this time for trading above the RTH Open. It's kind of reference for me above and below the RTH Open. As the session developed, I noticed what appears to be a failed auction below the 15-minute break and the IB break, initial balance, which is the 30-minute initial balance. That's what I look at. At the same time, the overnight high still remained untouched, and based on my stats, there's a very, very high probability that we will test that level. And whenever I see an important reference level that has not been tested, it immediately captures my attention. The combination of both the failed auction and overnight stats gave me a high probability trade that we are going to test the overnight high. So of course I waited for my confirmation to see big buyers, big sellers, and I entered the trade. Also, if you look at the heat map, you can clearly see a lot of liquidity building above the price, so that's another clue. Of course, there is no guarantee that liquidity will be touched above the prices, but again, it's just another another clue in this trade. The third trade ended up being a loser. That was the only losing trade for the day. The setup was based on accepted above the overnight high and a continuation move all the way up to the previous day value area high. The market already shown strength, and my expectation that the buyer will continue to move higher. The key concept here is acceptance, right? Acceptance occurs when the market spends more time above a specific level, like the open, the overnight high, or some sort of a range like the 15-minute range. And that was the idea for the trade. When the market accepted the overnight high, it often signals that the auction is ready to continue towards the next objective. That's exactly what I was thinking is going to happen. The problem was my stop. I placed the stop too tight and I got stopped out. Now, as you're going to see in the next trade, I re-entered again, but with a better stop. The last trade, the fourth trade, was essentially the same as number three. After being stopped out, I reassessed the market and asked myself a simple question. Has anything changed about the original thesis? And technically nothing has changed. The market is still showing acceptance above the overnight high. Buyers remain in control, and the previous day value area high is still intact. So I decided to go for it. One mistake that many traders make is assuming that because they got lost, that analysis must be wrong, and that's not always the truth. Sometimes the setups remains valid even after you stopped out. The important thing is to objectively reassess the market rather than reacting emotionally. And when the opportunity presents itself again, I usually re-enter the trade. This time I allow more room, not like the previous time, and because I was adjusting for the little bit of volatility that we experienced there. And the trade actually worked. Didn't get all the way to value area high over the previous day, but I got all target and trail my stops. Now, the key lessons from today's session is statistics continue to provide a value framework for me, for my style. I use the order flow, I use the statistics, and that's the valuable information for me. Second, liquidity remains one of the most valuable pieces of information available to me. If I look at the liquidity levels, it really gives me some ideas where the market wants to go. Doesn't mean that's going to happen, but where it wants to go. In closing, overall, it was a solid trade in it, even with one loser. I hope you enjoyed this video. I hope you're going to subscribe and hit the like or hit me with a comment. And I'll see you in the next trade.